Tax season can be stressful for all, especially for younger generations, given the impact of sports betting, investing, social media, and beyond. The Chief Tax Officer for Jackson Hewitt Tax Services, Mark Steber, joins me now with helpful tips to keep in mind this year. Good morning, Mark. How are you?
Good morning. Very exciting time. Yeah, we're at the end game for tax season. Time to get after it.
Well, I'm excited to talk about this because as a young filer myself, I think it can be a very daunting thing to kind of take on as a younger adult kind of budding into society. So let's start with this. Why can tax time be stressful for Gen Z and young filers? And then what kind of early steps can we take to prepare for the tax return?
Well, younger filers today are not like the filers of old. So if you watched your parents with their one W-2 and maybe a pension or Social Security, that's not the way the people under 35 are today.
Yeah.
They may have a job, but they probably have multiple income streams, at least one side hustle, maybe in cryptocurrency, online gaming, stocks and investments, multiple retirement planning options, and the list goes on, not to mention the many life changes that they have from new job to getting married to whatever. So you add all that together, that's a complex tax return for anybody. You double that with the false information on social media that taxes are a one-day-a-year event. They're so easy. Do it on your smartphone. Once you're sitting in front of that computer screen answering those questions, it can be a little overwhelming, and you're also not trained to go and seek professional help. You're told you can do it yourself. There's the internet, there's AI. It's just not the best model for your single largest financial transaction that you're going to have for 30, 40, or 50 years. You combine all that together, it can be stressful.
Yeah, well, it's good to, kind of have you as a resource or the tax services to kind of help us ease up this process and get through it. So something that's kind of interesting, and I think especially impacting younger people, is that, we've got March Madness coming up, but there's more and more of kind of a rise in interest in sports betting. So how would you say that kind of impacts tax returns?
Well, first of all, it's the same rule as it's ever been. If you have income, and here's a nice bet for you with your buddies at the bar, even if you have $1 of winnings, that's taxable. Suppose you have $1 of winnings and $1 of losses. I can net them. No. So the rules on betting are complicated, and as more and more states have come online with online gaming, a lot more people are taking advantage of that, and a lot more reports are being sent both to the taxpayer if they win more than a certain amount, and to the IRS. So I'll simply say that's another part of that complicated profile that your parents might not have done. It's not something to glaze over, especially if you start to have a good winning streak. You want to make sure you understand the rules, and much like side hustling or crypto or all the rest, make sure you have somebody in your corner that you can ask the questions of, even if you do it yourself, to make sure you understand the actual rules and you don't trip up and either falsely report too much and pay too much, or you miss out a deduction, or you leave something off and the man comes around asking. So keep it in a very simple format. Keep yourself organized. Keep your records, both online gaming or the rest of your life, and turn that over to a tax pro. It's just a simpler, better way that many people aren't trained on.
Yeah, it's like staying organized, firstly, and secondly, trusting the professionals to do it, because I know that I don't know what I'm doing. So, another thing that we hear a lot of is this buzzword invest, right? We hear invest, 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 invest in your future. So how do investments in both traditional stocks and cryptocurrency kind of impact tax season, impact tax returns?
Well, you got different types of investments ranging from cryptocurrency to equity, stocks, and bonds, and then your retirement accounts, of course, which is another whole topic where it's not the time of your parents with just one pension.
Yeah.
You have tons of choices. So I'll simply say, make sure you understand that, gains are taxable unless they're not, which means they're in a retirement account, for example. But even crypto, if you have gains, even if you don't cash out, you might have taxable income. Same with your stocks and equities. Just buying them and buying even crypto doesn't necessarily trigger a reporting event. But if you're happy, odds are that you've had something that made you happy and you might have a reporting transaction. And it is a wild west out there for your options and the different ways that you can invest your money. And back to your Gen Z question, which we started, a lot more of these people under 35 are in everything. They're in everything. 401k to traditional retirement to crypto to just buying gold and other collectibles. Know what the rules are. Don't report too much, but also don't underreport and have the IRS come ask you some questions.
Yeah. Well, and Mark, speak of being in everything, something else that we're seeing more and more of is small businesses or side gigs or whatever you want to call that. Anything we should know that's kind of important when it comes to paying taxes and kind of balancing that piece of it?
That is a real cornerstone of tax complexity, whether you have a small part-time side hustle or multiples or a big one. If you have income, you have consequences. And if you have losses, you may have a tax-deductible loss against your regular income. So simply know this, the rules on side hustles and self-employeds, they're complicated, but so are the rewards, the tax breaks, and the tax loopholes. So make sure you and your pro understand all that you've got going on. It's no longer, it's a part-time hobby, I'm not even gonna report it, and nobody will be the wiser. Well, one, that's not the rule and that's risky. But two, you may be missing out on a host of tax breaks when you later one day want to supersize your business and you need that 3 or 5 year reporting history. So no, that's an important decision, side hustling part-time or full-time, but it's also an opportunity to cut your tax bill, put more tax return bucks in your pocket, and also perhaps make a little bit more complicated life for yourself. But that's the part of the world that you live in now if you're doing that. So get some help. There's a lot of tax professionals out there, and they can guide you through the record keeping, the estimated payments, the how to pay less, and here's an option or a deduction or a break that you get that regular employees don't get. Make sure you know all the rules, and you and your pro can get you there.
Very good. Mark, finally, just real quick, how can people get more information about all this incredible tips and information that we covered this morning?
Well, our website at jacksonhewitt.com, we have videos, frequently asked questions. We even have the little box you put your zip code in and it pops up the map where the offices are. You can make an appointment and go on your time or just walk right in. So jacksonhewitt.com, a great resource whether you're doing your taxes yourself or you're working with a pro or you just want to debunk a myth that you heard from some TikTok pro, which is not really true. So jacksonhewitt.com, great first step.
Perfect. Mark, thank you for all the insight this morning. It really is beneficial. Make sure you do your taxes right and use Jackson Hewitt services. Thank you.
Thank you.